Okay, I suppose let's go ahead and get rolling then. So first off, hello to everybody, and thank you all for joining me for today's webinar, Records Retention Schedules 101. My name is Frank Fazio, and I'm an analyst and a licensed attorney with Zazio's consulting division, where I've worked on designing and updating retention schedules for the last 5 years. And today, we're going to have a quick crash course about records retention schedules. We're going to cover the basics of how they operate, and also walk you through designing and building one from the ground up. So the intent is that whether you're completely new to records management, or if you just want to have a refresher to help with records and information management awareness for yourself and the rest of your team, today we will walk through the fundamentals of records retention schedules and look at some of the best practices for creating and managing them. And when we're done, you'll have the tools that you need to create or update your records retention schedule for your enterprise. So let's dive in. We'll start with just a quick roadmap of a couple of the topics that we're going to be discussing today. So we'll begin by first talking about some of the retention schedule basics. What is a retention schedule? What is the purpose of a retention schedule? And why do we need to bother putting in the time and effort to design and create and manage one? From there, we're going to look at the various components and moving pieces that together are going to form the building blocks of our retention schedule and allow it to mechanically function the way that we're intending. Next, we'll move on and take those concepts and put them all together into a working retention schedule. And then, once you have that working retention schedule, you want to apply some record-keeping citations to bring your schedule into compliance with record-keeping laws and regulations, and also keep it in compliance as those rules change and get updated over time. And then finally, building a retention schedule is not without its challenges. There's a number of common pitfalls and inefficiencies that frequently crop up in retention schedules. And we'll talk about some of the ways to mitigate and remediate those pain points to make your retention schedule more effective. Okay, so let's start from the beginning then. Let's talk about retention schedule basics. So what is a retention schedule even all about, and what does it accomplish for the enterprise? So let me start by saying that for those in our audience who are seasoned records management professionals, this is going to be a little bit basic and remedial. However, it's important that we get everybody on the same page from the get-go, so that we all know the same terminology and key concepts, and that way even folks who are new to records management will understand the later parts of the presentation. So first of all, what is a retention schedule? The record retention schedule is a corporate policy, and it governs the retention and disposition of records and information. It fulfills 3 key roles in the organization. Firstly, companies use it to organize their retention and disposition. It sets the rules for the life cycle of every piece of information in the enterprise, how long the information is retained, and when and how that information ultimately gets disposed of once it reaches the end of its life. Secondly, it provides a framework for operational controls over information operations. So when you have a retention schedule in place, it gives you a yardstick against which you can measure the compliance of various business departments and judge whether they're fulfilling their obligations. And then finally, it's a source of legal authority and risk management for the business. There's risks associated with retaining information for too long, and similarly, you get other risks associated with keeping it for too short of a time. So by balancing these 2 competing interests and hitting the sweet spot in a record life cycle, business can minimize its risk profile. And in addition, having a well-developed and carefully considered policy in place creates a defensible basis for information operations that you can rely on if those are ever called into question. So let's dig a little bit deeper into each of these 3 bases for having a retention schedule. First, organizing retention and disposition. Companies need and must stay organized, and that's even more true for a really large organization. So information is often a company's most valuable asset. And, as time passes, this becomes ever more true. It's become more of a services and intellectual property-based economy. Some tech companies, really, their intellectual property really is their greatest asset. So all companies need a process to systematize their records and information processes and manage that valuable asset and protect it. So to that end, information is really too important for employees to be left on their own, left to their own devices to manage it. If everyone does their own thing, you end up with irregularities, inconsistencies. We've all seen what happens to, our desktops after a while. It gets cluttered up with different icons and saved documents and becomes a mess. So if everybody does their own thing with files and data and records, you get a huge disorganized hodgepodge, and you might not even know what you've got. So instead, you need a way to eliminate irregularity and inconsistency and get everything organized. So a rules-based approach to governing records and information is the best way to go, and that's what a records retention schedule does. A business has to develop a system to control the flow of records and information so that every piece of information has its place in the larger picture, and that system gives a prescription for how that information should be managed. A rules-based approach is the best way to go. And then lastly, companies typically have huge amounts of redundant, obsolete, or trivial information that really doesn't really serve a purpose except just exists, clogging up systems, living on shared drives and filling them up, and exposing the company to risk. We call that redundant, obsolete, and trivial information rot. And sometimes it can be as much as 70% of a company's records in a typical enterprise. They can be rot. So this information really doesn't serve any purpose except to take up space, cost money for storage, and in the event of litigation, it's potentially discoverable. So having a records retention schedule in place gives us a system that will slowly but surely reduce and eliminate that rot. So next, let's talk about operational controls. It's important for a business to exercise a high degree of control over its operations. And a retention schedule provides a clear set of guidelines that everyone can follow. Removes ambiguity about what's expected of each person. The responsibilities are clear and each person knows their role in the process. It's easier to get to the outcome that you're actually looking for. Next, the retention schedule is administrable, and by that meaning we can control it from a central location, create subsequent different versions of it and track changes, and we can put a manager or some other control person in charge of it. And lastly, it's a way to keep employees accountable. So if a rogue employee decides to go and delete things or decides to hold a secret hoard of data on their personal workstation, the retention schedule can be used as the basis for discipline and to bring the hammer down on that individual. So, all right, and then next, let's discuss legal authority and risk management. So when something goes wrong, you want to be prepared and protected, and retention schedules help you do that. The first way that it does that is it gives you a defensible legal basis for why you've destroyed a record or alternatively why you've retained it. So when you dispose of a record in the ordinary course of business, pursuant to a well-defined policy containing a records retention schedule, it gives you a high degree of protection against accusations that records were destroyed because of an improper purpose, or particularly you want to avoid any suspicion that records were destroyed to hide something improper or wrongdoing. If a court decides that records were destroyed improperly or in bad faith or to cover something up, the results can be truly devastating. The classic horror story is the case from many years ago with Enron and Arthur Andersen, where there were suspicions of accounting irregularities, and unfortunately the accounting firm Arthur Andersen shredded the documents, and the court slapped them with an adverse inference, which means that the jury was instructed to just assume the worst about whatever records they were shredding, assume them in the light most favorable to the prosecutors. So consequently, Arthur Andersen lost their license to operate, and the company was destroyed, and everybody lost their jobs. So that's really the worst case scenario from a records management perspective. But even if you don't get to the point of an adverse inference in a court case, you can still, if you don't manage your records and information properly, you can still get hit with a regulatory sanction, civil liability, or even criminal charges in some cases. So the way to protect yourself against this is to destroy information regularly, not in response to some bad event, but in the ordinary course of business, pursuant to a policy that's been carefully constructed and fully vetted, so that even if you don't get hit with an adverse inference or any of those other horrific financial or criminal consequences, the less you have, the less that's discoverable in the event of litigation or investigation, and the better off you are. So e-discovery costs can run into the tens of thousands of dollars for companies with a large volume of data. And when you destroy records in the ordinary course, that's been vetted in the course of a policy that's been vetted and researched, that data is just no longer discoverable, which puts you on a very good legal footing. Okay, so now we understand why we need a retention schedule. So let's dig into the mechanics of how they work. We want to have a look at each of the different components and look at how all those components work together to form a fully operational record retention schedule. So let's dive in. First of all, the basic concept behind a retention schedule is that we want to group similar records together and then set a life cycle period called the retention period. It's based on your unique business needs and legal requirements that are applicable to each different type of record and piece of data or information. A retention schedule should use sort of a hierarchical categorization system to help you keep it all organized and logical. At the highest level, you have functions or departments that correspond to either big business activities or the big business divisions of the enterprise. However, once you have those highest levels, you want to break each of them up into smaller pieces that are more manageable to give us some flexibility. So we call those record series. That's a group of related records that all correspond to a single business process. A record code is a call sign that we use as a shorthand description for a record series. And it's a short string of letters and numbers that serve that function. So instead of saying, calling a record series general accounting, for example, we might call it ACC 100 or accounting 100. We'll see how this works in a later section. And then we want to give the folks who are going to be using a retention schedule some guidance about what's inside each record series. And for that, we give each record series a brief, succinct description that tells them what the purpose of that record series is and what kind of records go in it. And then we give them some example records that are related. So for example, if we have a record series on recruitment of new employees, we might have examples such as resumes, background checks, and that sort of thing. So example records should be thought of as an illustration of the kinds of records that go into a record series, but they just act as guardrails. They should not be used as a comprehensive list of every single record that goes into a series, because that's not what we should be trying for. Your records and information will change over time as time passes and the business changes. So you want your retention schedule to be flexible enough to accommodate new pieces of information, new documents as they come along. So lastly, then, you're going to have the retention period. Retention period is the rule that the record series and what it contains must follow. The retention period is composed of two parts: trigger plus a period of time. So the most common triggers for a retention period are creation or active, but you can have other retention triggers that are possible. depending on the activity. So for example, if you are dealing with human resources records that cover employees, a common trigger to use is duration of employment or the termination of employment, because those records are still going to be relevant for however long a person works at the company, usually. Similarly, contracts, you might use a trigger like expiration of contract to determine your retention period. Or for litigation records concerning a case or controversy, you might want to wait until the final settlement of that controversy, etc. So by having those two components, you give yourself a degree of flexibility in determining just how long the life cycle of a particular record is going to be, and you can suit it to the particular use of that record. Okay, so let's take a look at that, all those components, or a couple of those components in action in this dramatically simplified example. So here we have three different functions: accounting and legal and HR, human resources. And you can see that in each of these, we have a shorthand abbreviation for each one. ACC for accounting, LEG for legal, and HUM for human resources. These will be the letters that go into the record code, the shorthand for each record series that we're going to organize under these functions. And we want to break each of these up later into individual record series. We would add some numbers to them, and we'll see that in the next example. But so the idea here is that each record owner is going to take their documents and say, okay, this one goes here, that one goes there, as the case may be, so that based on the content of the record, we can have them organized according to the schedule. So in this simplified example, we have these three functions, but when we also have some retention periods, but we don't have record series or record codes. So let's have a look at how that looks. So if we take that accounting function ACC and break it up a little bit, we have some smaller individual record series created. So we've added three. We have accounting 100 for budgets, and then we have accounting 200 for invoices, and then we have accounting 300 for financial statements. So each record series, again, gives us an additional layer of detail that helps our retention schedule be more accurately a reflection of the business, and it lets us have more delicate control. So we have some retention periods for each one of these, and I've represented those with a red bar. So on this chart, you can see that those red bars are at about 3 years for accounting 100, and 7 years for accounting 200, and we have 10 years for accounting 300. Now, the purple bar shows where a particular record is in its life cycle. So for invoices and statements, you can see that if the purple bar is the life cycle, those records are old, but they're not quite there yet. However, for accounting 100, our purple bar has reached the end of its 3-year life cycle, which means it's time for that record to be disposed of. Okay, so that's a really sort of a simple example of that. Now let's look at an actual records retention schedule sample. So here we have a more detailed sample, but again, this is just 2 record series, a small snippet of a retention schedule. In reality, you're going to have many, many more record series once you have a completely built retention schedule. So here, as you can see, we have our function, and we have a record code, and we have a record series, and some examples, along with a description. So the function we're dealing with here is accounting and finance. The 2 record series we have here are corporate accounting records and capital assets records. And for each, we have a record code, ACC 100 for corporate accounting and ACC 110 for capital assets. And then we have our description, records related to the processes associated with the management of payables and receivables, as well as the reporting on the financial position and performance of the company. That's corporate accounting. And for capital assets, we have records related to the purchase or sale and improvement of real property and equipment, otherwise known as fixed assets, and depreciation, amortization, and authorizations. So note that those are written in sort of a deliberately broad way, records related to. By having that sort of broad, expansive language in there, it gives the user some flexibility to say, okay, I think that this is related to this, and it should go here. You want to avoid trying to list out particular records or make it exclusive. You want to make it inclusive rather than exclusive description. And then we have our example records. So as you can see, we have accounts payable, invoices, check requests for accounting, and then for capital assets, we have property accounting, acquisitions, depreciations, and improvements. We aren't really trying to list every single conceivable record to generate an exhaustive list. We're just giving a representative example that will work as guardrails for our users. Okay, and lastly, we have our retention period. For ACC 110, we've given it a flat 7 years. For ACC 110, however, we have a more complicated trigger. We have life of asset plus 10 years. And we use that trigger because records for a property might still be relevant long into the future. You know, a building might have a 30-year useful life. So rather than trying to pick a fixed period, we use the trigger life of assets so that way we can keep the records at least as long as we own the asset, but plus a period of years. In this case, we've selected 10. Okay, so now we've seen a simplified example, a short snippet of a retention schedule. So now let's talk about how you can go about creating one. So what goes into actually creating a retention schedule from the ground up? You know, building one from scratch is a significant undertaking, and can certainly be a daunting task. Whether you're making one for a large organization or even for a small organization, it can be a significant undertaking. So let's see. The first thing that you're going to want to do if you are going to be building a retention schedule is to organize the company's records. You need to know what you have. So the way to go about this is to take a records inventory exercise to get a picture of what records and information you're going to be responsible for managing and governing. So the purpose is to get a handle on every record owned by the various departments. And there's a couple of key information collection strategies that you can use to help put together your records inventory. The first strategy to look at is distributing questionnaires. So this is sort of an easy hands-off way to get information from folks in different parts of the business. And it lets you get a large volume of information about what records and data each person has visibility on, and also determine what are the core documents they use to fulfill their job responsibilities. You can make the questionnaire very detailed, or you can make it very simple. Sometimes actually having a more detailed questionnaire can be counterproductive because nobody likes to have to go through a 20-page thing. Instead, sometimes the most successful questionnaires are simple and just gives the respondent the ability to answer and in an open-ended way, and give you as much or as little as they feel comfortable. So another go-to strategy you might use is a data mapping exercise. With a data mapping exercise, you're running analytics and using software tools to sort of scan and crawl through your workstations, shared drives, and networked resources. And this is great because it's largely automated. So it's a very low-touch activity to undertake, and it uses very little in the way of time and human capital. So data mapping is a great strategy for getting a grip on what records and information you have. And lastly, you can directly interview folks at different departments within your organization, which it is a lot more time intensive for a big organization. And for the large organization, sometimes it's really impractical to have interviews with a significant number of people. However, when you do take the time to sit down and get on the phone or have a Zoom meeting, you often get some of the best information, which helps you ultimately, as you're building the retention schedule, to get a better final product when you're all done. So those are often worth the time. But you need to use all three of those tools or some combination of them to get a good picture. Now, once you have that picture of what information and data you've got, then you need to plan how to proceed. You need to set a game plan for what kind of schedule you're going to create, and you want to set some goals to make sure your schedule is going to hit all those points and achieve those goals. But you want to be realistic about it. They say we had a colleague who once said that perfection is only possible in records management heaven, but you can get pretty close. David Stevens was his name. So first off, you want to decide the scope of just how comprehensive you want to make it, how complex, and how big of a time investment you're going to put into both initially creating it and maintaining it, and ultimately making sure that employees and colleagues are complying with it. So some retention schedules run into the hundreds of record series and cover every conceivable piece of information in the business. And others can be, very short actually. Some are less than 100 record series, but they're still able to adequately cover and manage very large and diverse business organizations' records and information. So the first big decision is whether you want to make the schedule overall organizational hierarchy be departmental or functional. So departmental or functional, these are sort of the two big overarching paradigms for how to build a retention schedule. So with a departmental schedule, you're trying to mirror the business organization and its departments. But in a functional schedule, you're not so concerned about departments. You're really just trying to track the big activities and where they fit in to the overall picture of the organization. So for example, your organization may have a billing department, it may have an accounting department, and it might have a corporate treasury too. A departmental schedule would give each one of those their own section of the schedule for themselves. But a functional schedule, on the other hand, you might group all of those together into a single financial management function, that a large umbrella that they can all live under, because they're all related activities, dealing with money and finances. Or similarly, you might have a call center department and a sales department, separate departments of the organization. But a functional schedule, you might group those together into client services and sales, because they're both dealing with the function of reaching out to customers to develop business opportunities or respond to their needs. And so functional schedules are sort of the gold standard now, because the advantage is that a functional schedule is more flexible and more logical. And so you can adapt it as the organization grows or changes. So when you have a reorganization of the business, or if you merge with another company, or some other big change happens, it doesn't necessarily have to upend your retention schedule if you use a functional schedule. But with a departmental schedule, you would have to give the retention schedule a facelift every single time there's any change to your organization structure. So, but the advantage on the other side of a departmental schedule is it's obviously pretty easy for an employee to understand the structure as long as they work there. So next you have to decide how granular you want to go. More record series gives you more flexibility. And so the more granular you are, the more options you have to keep some records longer and some records shorter. But the more comprehensive you make it, the more record series you have, the harder it is for everyone to understand it. And it's also a lot trickier to administer it, monitor it, and control it. Some of these retention schedules can run into the hundreds of pages, and it's really a complete mess. And ultimately, it doesn't serve the objectives, because when it becomes so large that people can't use it, it's lost a lot of its utility for the organization. Okay, so once we have a structure decided on, and we have everything in an organizational hierarchy, the next thing we have to do is pick some appropriate retention periods for how long the life cycle of each of these pieces of information is going to have. And there's a few main factors that you go into making those decisions. The first thing is common practice. So in a number of industries, there's usual and customary practices or conventions for how things are done, including how long to keep records of information. So when everybody in your industry is doing things a certain way, you certainly don't want to be the one who does it differently. So it's sometimes good to go with the flow. And this is certainly a case where that's true. So for example, video surveillance images, those are commonly kept for no longer than 2 weeks to a month at the longest, except in the case of an investigation or the commission of some crime. And that's, in some countries they have strict rules on that and laws, and others it's less clear. But as a common practice, there you don't want to keep video surveillance records very long because of privacy concerns. Another example of a common practice is environmental records of hazardous environments. And when you have employees who are working in conditions where they're potentially subject to exposure to physical hazards, those records are often kept for very long periods because of the possibility of latent health effects that occur years later. So think asbestos and mesothelioma, or lead poisoning is another example of this latent health effects that can crop up years later. And for that reason, common practice is to keep those records for a long period. Okay, so the next biggest driver that you're going to look at for determining your retention periods is taxes. So they say that the only things that are certain in life are death and taxes, and so we all have to pay our taxes, everyone has to do it, but you want to make sure you have the records you need to prove the amount that your organization is claiming. And so this is very important. So different countries have different tax record keeping periods. Typically those range from about 5 to 10 years, depending on the jurisdiction. So a wide variety of your business records, like invoices and checks, might be important for proving your tax burdens. And so you want to make sure that you're complying with tax and accounting record keeping laws for every jurisdiction that you're in. And we'll talk about this a little bit more in the next section on record keeping citations. So that brings us to record keeping citations. You want to look at whatever, beyond tax, there's lots of other rules and regulations out there for record keeping requirements, and you want to be aware of as many of those as you can. This can sometimes be a daunting task because, as you know, in the United States, the Code of Federal Regulations goes into the thousands of pages for the United States alone, and there's a huge body of regulations with lots of record-keeping rules, record-keeping citations buried in there. And after all, that's just for the United States. For a multinational organization, it really becomes a large volume of different overlapping and sometimes conflicting different legal citations and record-keeping rules. So that's why Zazio, for example, has a database of over 120,000 different record-keeping citations in over 130 countries, and so they're adding more all the time. So that can be a huge effort getting a grip on the legal citations that apply to your operations. And then lastly, you want to have visibility of if there's going to be a case or a controversy or litigation or investigation about certain records. You want to keep those records for as long as the litigation or the claim is going to be going on. So for example, this is really common in the insurance industry, for example, where you have a contract for insurance, it has a defined period, and you kind of know that you're going to get claims on that policy. That's sort of the whole point. And so really any time that you're suspecting or anticipating that records are going to be needed in court to prove something, you want to hold on to those for a period that's adequate to be responsive to those legal proceedings. And so those are the biggest factors that you're going to put in to determining what retention periods you use for your different records. Okay, so now we know a little bit about retention schedules. It's time to undertake some research to compile some record-keeping citations. And the first step you want to take when you're going to look at record-keeping citations is you want to figure out how the company is regulated. Certain industries like healthcare or banking and financial services have their own industry-specific regulators. So, for example, the FDA, Food and Drug Administration, or the SEC, Securities Exchange Commission, or the Federal Reserve. Those are some of the big regulators in the United States. And each one of these has a portion of the federal regulations that they cover, and contained in those regulations are some record-keeping rules. Other industries, may not have their own unique regulators that cover them, but every industry is still going to have to follow the basic employment laws and tax laws and privacy laws that exist for each jurisdiction. So sometimes for a really large company with a diverse set of business or industrial activities, there's a wide variety of different areas where you're subject to record keeping requirements. And sometimes it can be hard to get a handle on everything that your business does, even if you work for the company. So sometimes you want to take a look at whatever publicly available information you've got out there about the company, such as websites, government filings. A company's annual report, the 10K submission or the 10Q, those are great resources, and sometimes they can be a bit lengthy to read, but that usually will give you everything you need to know about your particular business. Also, questionnaires can sometimes be helpful. Which regulators do you have to answer to? You can ask different folks on the organization. Yeah, but sometimes, of course, the best way to just get a broad overview of what regulated industries a company is active in is just to go ahead and, Google yourself. So sometimes that's the quickest and easiest approach. Okay, so once you know where to look and and you have your list of record-keeping citations compiled, you have to compare these record-keeping requirements to the schedule and make sure that it's meeting all of those requirements. So what we're trying to do is we're trying to take a record-keeping requirement and match it up to the records in the retention schedule that requirement covers. And the goal is to find the very best fit for each requirement. And sometimes you're going to have requirements that cover records that live in 2 different record series, or you may need have a requirement that covers multiples. So, for example, tax record keeping requirements might cover both employee payrolls, customer billing, purchasing. One single tax requirement that says to retain records relevant to determining your tax basis, it could impact lots of different places in your schedule. So sometimes you'll come across a requirement that it's not clear where the records are located in your schedule. And so if you can't find a match for a record keeping requirement in your schedule, this might mean that your schedule is missing something. Or it just might mean that your schedule is too confusing and you can't find it. So looking over the record keeping citations is a good exercise. That's a good way to stress test your schedule and potentially identify any gaps. So, the best example of requirements that are hard to map are the broad requirements that potentially apply all over the schedule in different places. So we talked about the tax laws. There's also privacy laws, for example, and those can affect everywhere in the schedule that has personal data. So, tax and accounting, and we call those broad commercial laws, affect everything that involves revenue or expense that impacts the financials of the company. And then statutes of limitation, we call those SOLs for short, those set a maximum period that a claim can be brought for things like a contract. And those can impact your retention decisions wherever you have records and information that touch on a contractual relationship with a customer or a supplier or any other third party. So for those big categories that impact multiple parts of our retention schedule, we have to figure out a methodology for which record series hit on those issues and then follow the record keeping requirements consistently. So if we decide that a certain collection of different record series all have records that are relevant to tax, we want to make sure that we keep all those records for at least as long enough to comply with the tax laws. So we want to give them all a uniform treatment, all the record series that are relevant for a broad requirement, like a tax requirement. Okay, so once we have our record keeping citations in place and we have mapped and applied those to our schedule, we often encounter a problem when we're comparing the record keeping rules to the retention periods in our schedule. The requirement may say to keep records for X years, but the schedule says we're only keeping those for Y years, and it's not long enough. And so we're out of compliance with that rule. That's the most common issue you're going to come up with. But there's some other variety of flavors of problems that you can have. Often it's not that we aren't retaining the records and information long enough to comply, But more and more with personal data, the issue is that the requirement is to destroy the records quickly. So sure, most folks are familiar with the GDPR out of the European Union, which generally says that you have to retain personal information for customers and employees no longer than necessary to achieve the purposes for why you collected it. So those are the two most common issues that come up when you're vetting your retention schedule against record-keeping citations. Then you can really identify and zero in on and fix. It's retention requirements that want you to retain longer, and compelled destruction requirements that want you to destroy or delete or anonymize before a certain time passes. But the other ones that come up a lot are statutes of limitation, which we talked about earlier, and those set the limit on how long a claim can be brought. Once the statute of limitations is expired, no more claims can be brought. And so potentially any records in the case of a contract, any records that could be related to that contract or any potential claim could be relevant. And you might make the argument that, okay, we should keep all those records for just as long as the potential for a claim exists, as long as that statute of limitations is still running. But if you think about every possible contingency, every possible lawsuit, every piece of different information that could potentially be relevant to some type of issue that could come up later, it starts to get really kind of metaphysical, and you start thinking in the butterfly effect, and you end up wanting to retain everything for a really long time. So it ends up being a bit of a slippery slope when you start down that line of thought with statutes of limitations. So really, it's not correct to think of statute of limitations that way. SOLs do not imply that you really have to keep every relevant record that long. And if you do destroy some soon that might be relevant sooner than the statute of limitations, you're usually okay. But the statute of limitations should still be a factor that you take into account as you're designing your retention schedule. But you just shouldn't think of them as a hard record-keeping requirement like a legal record-keeping citation is. And then another one that's sort of a soft consideration are handling requirements. So these are qualitative record-keeping citations, things that say to keep records in a secure location, keep records in a particular language. For example, in Quebec, you want things in the French, a copy in the French language. And so, many schedules, retention schedules, don't have a field where they specify the handling requirements. It's very rare that you have, for example, there's a lot of handling requirements that allow electronic records. Some allow only paper, but those are very, very rare. And so most of the time, we don't express those on a retention schedule. Some do. Some do choose to do that, but in most cases, that's managed outside of the retention schedule. So one common handling requirement that does come up is WORM requirements. That's an acronym for write once, read many, and it prevents information from being erased or altered without leaving evidence or trail that it's been altered. So these requirements and handling are important, but it just adds an extra layer of complexity that's usually not really actionable for somebody who's using the schedule, and that's why most choose not to put it on their schedule. Okay, and then next, once we are aware of any issues, we want to go ahead and have an administrator, that's you, make a decision on how to update and fix the schedule and address and comply with the issue. So before you consider making a change to your schedule, you want to make sure that you're fixing the correct record series, the one that contains the right regulated records that the rule is covering. So you just want to double check that you've got the right regulated records. And then you want to document what you're going to do, whether that's an increase to the retention period or a decrease to the retention period, or just change the trigger. Sometimes all you need to do is modify the trigger in order to bring yourself into compliance with the requirement. But sometimes you get a really onerous requirement that says to keep something for a really long period, or some cases permanently, but it's just one record in an entire record series. But that's bad because you don't want to let the tail wag the dog, where just one requirement for one record causes you to keep the entire collection of records for a really long time. So there you might need to consider making a record-specific exception that just applies to that one record, or else even maybe letting that record live in its own record series, a brand new record series just for that record. And then, last thing you want to do is double check that a law still remains valid. So sometimes painful, the most onerous and painful regulations eventually get repealed after enough people complain about them, and the lobbyists get on the case trying to persuade legislators to roll them back and pare down the requirements. So before you move heaven and earth to comply with something, make sure to check that it's the one that you're aware of. Make sure to check that it's still on the books and is still valid. Okay, so now we've walked through building a retention schedule, some of the basics of maintaining it. The last thing we're going to talk about today before we wrap up is just briefly touch on some of the most common retention schedule pain points and the pitfalls that folks commonly run into once they dive into a retention schedule, and also how to help triage and apply first aid to these kinds of problems to remediate them and improve the retention schedule's effectiveness. So let's just have a quick look at those. In terms of pain point remediation, the first problem we touched on is that a schedule can be too complex. We touched on this before, but if you really have too many record series, too many retention periods, it can be a nightmare for people to understand and comply with it. So if this is the case for your schedule, there's a couple things you can do. In the first place, you can simplify the retention schedule and look for ways to group similar records together and get it to a more manageable size with more streamlined categories. And this can make it much easier to digest for employees and also easier for them to follow. Another big problem that you might have is that you're in too many different countries and you've got too many different retention rules for different countries. You might have different, responding to accounting requirements. You may say, okay, some countries 5 years, some countries 10 years, but the more you customize retention periods for different areas of the business or different countries where you're in, the more complicated it gets. And this can also lead to confusion and mistakes. So one solution is to harmonize, we call it, where you pick a retention period that works for most or all of your different countries where you're operating, and then use that as your global retention policy instead of having a hodgepodge of different rules for each country. And so this does tend to cause things to end up, when you pick one that works for everyone, it's usually a longer one. So in the case of accounting, maybe you would just say, let's keep accounting records 10 years, everywhere, which does, increase your storage costs a little bit, but sometimes it can be worth it in terms of how much more simple it makes your operations and how much simpler it makes complying with the retention schedule. So looking for opportunities to use fewer country-specific exceptions in your schedule, that can make it a lot smoother and cleaner and easier to use. Okay, the next big pitfall is that your schedule lacks legal support because your list of record-keeping citations is either non-existent or outdated. So to remedy this, you need to do homework and record-keeping research of the sort that we sort of just discussed. It's usually a good idea to refresh on a regular basis. If you have the resources and the time, the best practice would be to refresh your record-keeping citations every 6 months or so. But for a lot of folks, that's not practical. But what you do want to do is at least do it every 2 years or so to keep your schedule, have a degree of updating to your schedule and keep it evergreen as record-keeping requirements do change, because those will change as the years and months pass. And then another huge one is privacy. As we all know, privacy is now a huge issue. We have the EU GDPR and the California CCPA. So it's possible, and in fact, very likely, that there will be more privacy laws coming down the future. And so you want to have a robust strategy in place to deal with the personal information that's contained in your schedule. So usually for personal information, your goal is going to be to delete this information after a shorter period of time. And what you can do to ready yourself for the privacy laws we have now, and also ones that might come in the future, is to conduct privacy analysis where you identify all the places in your schedule where personal information exists. And then once you know where the personal information is in your schedule, you can look for ways to reduce down those retention periods and get them down to the point that they're no longer than the bare minimum operational need that you need in order to fulfill the purposes for why you have that information. But sometimes this is not practical because in a lot of cases you group together personal information along with other records that have to be kept for a long period. And so just reducing is a problem. So, I mean, for example, those payroll records might be relevant to tax, but at the same time, they have personal information about your employees on them. So, in some cases, it's not practical. You might want to sometimes separate record series from other records in order to isolate personal information so you can manage it without interfering with other records. So in this way, if you take the sensitive personal information and let it live in its own record series and granularize your retention schedule and add a few record series, it gives you the flexibility to assign as long or as short a retention period as you need for that sensitive personal information. And so in this way, you are adding record series and you are granularizing, but you're doing it in an intelligent way that responds to a specific need, in this case, privacy. And then lastly, it's often the case that you put a ton of work and time into designing a retention schedule, but you're having a hard time making sure that people are actually following it. So there's a couple of different levers you can pull to try to fix this and get folks in your organization to follow it. Once the schedule is already out there and has been communicated, sometimes you need to resort to enforcement to get people going. And you can use some different tools like compliance auditing, where you make the retention schedule a hard requirement for everybody. You put it into people's job description, and their list of job responsibilities includes complying with the retention schedule. And then you do audit checks to make sure that people are actually complying. And if they aren't, you might have to resort to some discipline. But that method, of course, is not very much fun for anybody involved. So a better way and a more fun way is to entice people to follow the schedule, is to include them when you're building it, so they participate in the design and construction of the schedule. So during those interviews and surveys we talked about, when you give folks interviews and surveys or some role to play in the process, it gets their own concerns baked into the schedule. And they're certainly more aware of the retention schedule and more likely to follow it. So, in some cases, people who have a lot of input in the schedule sort of become departmental champions for the schedule. And so even though it, involving a lot of people in a collaborative effort to build the schedule does pay dividends later on in terms of adoption. But of course, the downside is the time investment it takes, to take into account everyone's concerns. And so you can either involve people in the outset when you're first building the schedule, or you can involve people in an effort to update or streamline the schedule. Those are your two big opportunities to include people. Okay, we're just about out of time now. So those, obviously just a brief overview, and I want to thank you all for your kind attention. This does bring me to the end of the presentation. So I want to thank everybody for bearing with me, and I'll open the floor to questions. You can write a few in the comment section here in GoToMeeting. Now, if you're interested in records management, information governance, software consulting, make sure to reach out to our sales team. Our sales folks would be delighted to walk you through our product and service offerings and find something that works for what your business needs. Also, our consulting team, of which I'm a member, offers a full suite of assessments and services to design and update and improve your retention schedules and assist you in each of the topics that we discussed today. If you have any other questions, of course, you can certainly call me or email me. frank.fazio@zazio.com, or you can reach me with my direct line there. And so, all right, thanks everybody.